Mr. Alan Nuckman is with us. Alan, you're watching the electric vehicle space this morning. How can't you with Tesla on the move? But that's not the one that's caught your eye. Talk to us a little bit about why you're looking at NIKOLA.
Actually, it's that whole space. So it's not just Tesla. We've seen big moves in Plug Power and Sun Power and NEO. And to get back to like AMC type stock, this stock may not be an investment, but it is a trade. There are great opportunities, and from risk reward, this has a great setup. So I'm looking at NIKOLA. It is 65% off its one-year high, and it's 45% off the August low, the forever low at $9. So it's a stock that's stuck in a range between 10 and 20 here for now 8 months. And last week it broke out and got to that 15 midpoint. It did back off, so it's giving us a secondary opportunity here in this stock. And again, it had what I look for as bullish divergence, meaning when it made that low in August, it did not make new highs in volatility. And that's usually a sign that the short sellers have run out of strength. And so we'll look to play this for a continued bounce here in the future.
Yeah, and I see that you're going to the options marketplace, looking to gain a little bit of leverage here, Alan. And you're going out to April, so about half a year out, really giving yourself some duration. You're looking at that 10-strike call, and you mentioned looking at a $5 debit or better. And I know, of course, NIKOLA has had a nice morning, so it's a little bit higher than that now. So, Alan, how does that impact things? Do you implore some patience here and you wait for that price if somebody's looking at this and of course, isn't in it already, or do you adjust that strike price or duration to get that price that you're looking for?
So what I'm looking at is long term here, and I'm using in the money stock substitution strategy here, and being long from that bottom at 10. So that's a place I'm fully comfortable with. And right now that option's trading for about $5.50. If you wanted to raise the price of that, that's what I'm looking at for the longer term. There's going to be a lot of volatility. Now, volatility is opportunity. And unless it goes straight up from here without getting you, I come up with these prices looking at what the theoretical value was coming into today. I had it about a quarter above whatever the theoretical value is. So now the theoretical value is at 525 or so. So maybe go up to the 550 level. So the idea here is buying an in-the-money option that's going to act like the stock. And the beauty of this play, the April option, which is deep in the money, which is $4 in the money, and then the time value is maybe $1.50. The April option is only $75 more expensive than the January option for twice as much time. So buy more time than you need, buy enough time to be right, and a lot's going to happen between now and April, obviously, in a stock like this. So that's the way to play it. The delta on that is about 80%. But the important thing here is, and I know you talked volatility in the last segment, looking at something like AMC, the volatility in this is also pretty extreme in triple digits. But when you're buying an in-the-money option, the only component that is affected by the volatility is that intrinsic is the time value. So that's important here, that it's not going to have as much impact on this option because you're buying an in-the-money option that's going to act like the stock. And if this stock can get back to this 20 level, which is the midpoint of the big picture, it's traded between 10 and 30 for 2021. So we get to 20, then this option now is $10 in the money, and you're looking forward to nearly double.
No, well said. Great breakdown. And Alan, as you point out, by buying that in-the-money option, you cut off some of that extrinsic value. The time decay doesn't work against you quite as extremely as it would if you were buying out of the money premium. You got a ton of duration here, waiting for that move to happen. If it will, it's risk defined. You talked about that level to the downside as being a level that helped you kind of select that 10 strike. And I think most importantly, for those who are looking at a name like NIKOLA or really any name that's really fallen into this space of extraordinary volatility, there's no defined profitability here. If this one really takes off to the upside here, Alan, you stand to not be capped.
Yeah, exactly. And that's the beauty is you got unlimited, and I love this bottom base, and you're going to get a better payoff by buying this in-the-money option than you would by tying up your money in the stock. So that's the way I like to play this. And I do appreciate that you recognize opportunity. So you know what? I'll let you host next week if you want to as well.
Hey, I appreciate that, Alan. But hey, we got to run. Thanks as always, Mr. Nuckman, for joining us here on Morning Trade Live and the TD Ameritrade Network. We'll catch up soon. We're going to take our first short break. When we get back, it's time to look at